How is that? Is that better? Can I get an audio check, video check? I wanted to do this before 6 o'clock so we can get started right away. We have a lot to go over. I'll give you some intro music while you wait. It's Talent. I saw net. Crazy, huh? Amazon after hours getting pounded off of its highs. It hasn't broken to lower lows, although it did go negative only a few minutes ago. I only see one blurb out there that could possibly explain it, but it doesn't make sense. So I think it has everything to do with valuation, to be honest with you. I don't know what anybody remembers. I had that background a couple of days ago that was really cloudy, and some guy said I looked like I was talking through ice cubes. And so I made it a point to get that fixed because I know it's irritating. So hopefully the background's a little bit better, audio's good. We're going to be good to go in a couple of minutes. What time do we have here? Amazon. I keep telling myself there's no crying in peace. Are you long of Amazon right now? I don't have a position in it. I haven't had one in a while. I'm looking at my face right now. I'm so pale. I need summer really, really bad. Get some like a corpse. All right. What time do we have? 2 minutes. So you're long through a call spread, define risk. Okay. Sorry about the after hours action. Maybe it'll recover tomorrow for you. Now I want it to recover because of you. All right. So yeah, let's take a look. While we're waiting for people to populate in here, we're a little bit early tonight, but it's better to be prepared in advance rather than doing this on the fly and having people get ticked off. So like, subscribe, you know the deal, folks. Also, we're sponsored by TrendSpider Automated Technical Analysis. Use the link below, 35% discount code. I don't like hawking products. It's the only product I hawk right now because I believe in it and I use it. So I would encourage you to use it if you're part of the AI age. Well, that's the product for you. TrendSpider. Again, they have a 7-day free trial offer. I give it away free to silver and gold level members. Let's talk a little bit about the after hours price action this evening. And the shocker here is that Amazon, which really killed it. I'm going to go over their numbers in a moment. They really killed it on their across the board. There's nothing not to like about their numbers. But for whatever reason, let me go to the big screen. This is what I've been watching after hours here, and now they just did it. When Amazon reversed, VIX did not respond. This is a 30-minute chart. This is a 5-minute chart. Can you see it with my big fat head? Yes, you can. So the VIX did not respond. Now it just opened up at 6 p.m. and it's gapping up. I have an alert set down here. I want to see if Amazon, hopefully it doesn't for Talon, my good friend Talon, hopefully it goes up straight through the moon. He's got call spread on there. That's a long position. Trader Isaac, hello, sir. Yeah, I wanted to get a couple of technical issues worked out prior to going live, and I'm kind of happy I did because it was one, and that background issue that I had is all resolved now. Franklin, hey, brother. All right, so VIX just broke out. Now it's reversed a little bit. That's only a 5-minute chart, very volatile. NASDAQ futures have gapped down. They were strong all day long. All day long. How do I know? I was short and I felt the pain. So I had to cover a little bit of that position today. So Amazon reported after hours. We'll go to their numbers in a moment. Here's the price action in the after hours session. This is now a 5-minute chart. They were trading as high as 123 per share. That dash line was resistance. We were stopped right at it. And at current, we are now down slightly in the after hours session. So we gave it all back. So what's the deal here? Well, they had the conference call, and the only thing I could see, maybe something's been updated since the last time I took a look, was that the Amazon CFO says operating income negatively, where is it? I just lost it. Negatively impacted by employee severance charge of $470 million in Q1. I don't think that could be it. I mean, think about it. It's a one-time non-recurring charge, and it's a drop in the bucket. So you're going to go from a high of 123 to negative on the session. I'm not buying it. I think there's either something else out there, or the market's got to peak and a rethink about valuations, and we're going to talk about that in a moment. So maybe we're going to recover here. I'm not saying we're not, but I just think it's very, very odd price action here on Amazon. Also, after hours, Talon brought this to my attention, and that was that Cloudflare, not CloudStrike, but Cloudflare, reported after hours, and the poor option sellers on this one, they got annihilated. What was the anticipated market maker move here? About a $7 anticipated move. Actual, they closed at 60, last tick 45. That is an absolute annihilation of option sellers. And I have traded the options on net, and I would have traded, were I not tied up right now with Chipotle, I would have probably been involved here. So I'm counting my blessings with Chipotle because I know that Chipotle is probably going to pull back in. You never know with these other names when they gap down. So how long it's going to take. So that's the after hours price action. I have an alert set on Amazon just to keep an eye on it. VIX just hit session highs. Now at 109. Very strange. Very strange price action. All right, let's get to it. So I mentioned earlier that I took some shorts off the table today. Why? Because I had to. I had to. And I'll go in the reasons why I had to in a moment. Because I was long of the put options. So whenever somebody tells you that they're long of put options or bragging about why they're long of put options or even long of call options, ask yourself or ask them, what was your edge? And if they can't answer it in one sentence, they're not in the right trade. They don't know what they're doing. So if you're going to get long of options, know what you're doing, have your plan laid out, what's your objective, and plan on an exit strategy. Yesterday, I shorted the Qs, anticipating lower lows because of the reversal off of yesterday's highs, given the strong price action of Google and Microsoft, yet the Qs couldn't hold their mud. They faded. Add to that, the Dow transports had taken a bloodbath of a beating all week long. The Dow Jones had fallen, S&P 500 had fallen, and it was only the Qs that was the last man standing. And forget about the small caps. They were annihilated yesterday. Fast forward, you got Meta's earnings. They gapped up the futures this morning. I didn't intend on closing out the position. Taking some put options off the table. The reason I did is I'll go to it in a moment, the rationale of as to why, and it has everything to do with two charts, triple Q weekly, triple Q monthly. We'll go to those in a moment. So before we get to them, I want to talk about the environment that we're trading in here, folks. The environment that we're trading in here is now officially clown world. What do I mean? Democrats attack Matt Gaetz' Ukraine audit resolution as divisive and ill-advised. They're corrupt. They want to hide their thievery in the Ukraine. It's a piggy bank for these seagoing monsters, these lizard people that are out there, and God forbid they have any accountability. They would rather put this guy in jail for whatever they could, and that's exactly what they'll probably try to do because he's full of big D energy. So these Democrats and the Republicans too, the rhinos, they don't want an audit. They want no transparency whatsoever. This is our government at work. Argentina abandons the U.S. dollar in China trade as local Bitcoin reaches record high. Today, you had Elizabeth Warren come out and said anybody with a digital wallet, a cold storage wallet, they should have police come to their home and be arrested. This is the world that we are now, the America, I should say, that we're living in. There's a competition of who could be the biggest arch villain, dictator, or authoritarian in this country. And add to it, you have the only talking head out there that had an ounce of integrity in the mainstream media, and that was Tucker Carlson. He is now gone. He'll do his own thing. I'm sure he's going to do great. But mainstream media is officially dead. It is pure 100% propaganda. And the thing that worries me is what don't we know that's about to hit us. We are being treated now as if we are North Koreans, and we have a dome around our news flow, and we are demanded to be afraid of either Russia, China, the next pandemic, rather than being afraid of the corrupt politicians and the corporatists in Washington, D.C. that are robbing us blind. And it's not going to last. And you know it's not going to last because they're lashing out. When you cannot sell people on your vision and on your ideas, well, you got to resort to violence and authoritarianism, and we're seeing it day after day, and they don't hide it anymore. It's out in the open. So from when I wake up and I look at the market, that this never leaves my mind. It never leaves my mind because at some point in time, whatever they're managing to keep quiet right now is going to break through because the markets won't allow them to keep it a secret anymore. But there are ways for us to identify that there's something very, very wrong with this economy. And I've been pointing to the yield curve for a long while now, and it's getting worse. It's getting worse, which is one of the primary reasons why, in addition to the price action of the transports yesterday, I went short of the market. I took some off today. So Amazon reported stellar numbers, despite their price action after hours, reported stellar numbers. And I highlighted this before, the reversal on Amazon in the after hours session, but it's kind of ironic. The reason why I highlighted this was because of my concern that what was driving their results. Was it the headcount cuts? So investors will want to see signs that Andy JC's cost-cutting measures, which included cutting 27,000 corporate employees, are helping to slash expenses and boost profits. Yes, they are. And in fact, not only are they working for the EPS growth, you saw revenue growth come in strong as well. So it's not just the headcount reduction that's driving results over at Amazon. So I find it very, very odd, the price action after hours, because when you take a look at their numbers, I mean, wow. I mean, there's nothing wrong here. There's nothing wrong here. Everything was a beat. Very, very nice numbers. Let's check in with the after hours price action again. It's weakening up. It's now negative in the after hours session with the volatility index moving up higher. Let's get NASDAQ. This is the triple Qs, the futures though. After hours, gapping down. So something very, very wrong is going on here. I want to check out the 10-year yield. It's not the 10-year. Dollar's flat. I don't understand what's going on here. Something's up. Okay, moving on. So we had earnings this week out of a lot of companies. 15% of the S&P 500 report earnings this week. So it was huge. So a mixed bag by and large. We had last night, Microsoft, Alphabet. We know what happened there. Chipotle, I did an options trade on that. It ripped my face off. So I'm managing that trade right now. We'll eventually make money on it or scratch the trade. But right now, I have a lot of capital tied up in Chipotle because it's a $2,000 stock. So I got a little bit overweight there. My bad. I thought I was deep out of the money. Should have gone deeper. So we live, we learn. So a lot of good announcements came out this week. So one would think that with these positive earnings beats, all is right with the world. You know, Bob, every Friday and every Thursday, you come on here, well, the market's expensive. The market's expensive. Is it still expensive? Well, how expensive are we? We are very, very expensive. We are pretty much unchanged. Even with the positive beats this week on EPS, 3-month trailing moving average, we are pretty much unchanged versus last Sunday. Think about it. And when you take a look at the valuations of names, and this is why I've been pointing to the valuation of Amazon and these other names as possibly being the reason why you got in a reversal here on Amazon, is that with Amazon, you have a PE ratio of 261. Is this updated for today's earnings? I don't know. So we'll have to double back tomorrow and recheck to ensure our data is right. Google, not that expensive, but not cheap either. PE ratio of 23. Microsoft, PE ratio of 23. Oh, no, it's the wrong one. Yeah. Microsoft, come on. For the 10th time, Microsoft. Thank you. Jesus Christ, you got to be kidding me. Do I have internet? I have internet. I don't know what's going on here. So these are all very expensive. Chipotle just popped up. They have a PE of 54. So think about these valuations moving forward. They want to break this market out. They tried to do it today. They failed to do it today. They may do it tomorrow. It's not over yet. One trading day left to go in the week. We're going to go over the weekly charts, in particular of the triple Qs, in a moment, because where we're at is at a pivotal point for the Qs. Now, this lady here, I'm not a big fan of Dan Nathan. This is Dan Nathan. I call him Magoo. He allows his politics. He's a very, very big lib, anti-Trumper, to get into the way of his investing, and it drives me nuts. I do not do that. So here is Liz Young. I never heard of her until today. Very bright. She's a blogger for SoFi. Very, very intelligent. And I want to play for you a couple of minutes of what she had to say. So give her a listen. Not so much Dan.
Into this earnings season with a lot of fear for negative results, negative surprises. And where we stand today, almost halfway through the S&P 500 earnings, and we've got surprises to the magnitude of about 8% on the upside. So when you're stuck in that sort of horizontal trading range, you end up pretty ripe for, if good news comes in, you go up, if bad news comes in, you go down. But to your question before that about the actual leadership, I think it continues to be narrow. And I'll tell you this, I mean, some of those companies did absolutely post good results. And what you want to see as an investor is the market respond to fundamental strength and to earnings reports that were good. So I think some of that is a positive. But on the other side of it, when you look at just the big cap tech names that continue to rise in the face of probably another Fed hike, in the face of probably an economic contraction, this is what momentum looks like. Now, that also goes to say you can't fight the tape, right? I mean, we know we've been cautious. I remain cautious on the macro economy. I remain cautious on valuations. But momentum is a really strong force, and it will probably continue until and unless.
So I want to pause there for a moment. There's more to go, but she's 1,000% correct, which is the reason why I said I have to lighten up on that long put position against the Qs. The market was too strong. I was looking for the fade on the day like we got yesterday. It didn't happen. They closed it strong. That's the market sending you a signal that you better be very, very careful. Don't get too self-righteous with your opinions and start thinking about what the tape is telling you. And the tape was telling us today the market wants to go higher.
It has a reason to stop, and we just haven't quite gotten that yet.
Yeah, you know, it's interesting. So we have this Fed meeting May 2nd and May 3rd. And I think a lot of investors are positioning right now for kind of a one and done. And I think it's kind of baked in there that they're not going to signal when and how they pivot, right? Like that's just not going to happen. We've talked a lot about it on the tape with you and with Guy. And I think we're all in agreement that if they do have to drop Fed funds rate precipitously anytime in 2023, it's not going to be something that is really that supportive of equity valuations. Okay, so like let's just agree on that. But as we think about this Fed meeting,
all right, so Dan Nathan there is absolutely correct. So this goes back to what we always talk about when the Fed pivots. When the Fed pivots, stocks generally don't go up, they go down. It's because it's the Federal Reserve responding to a macro event. So a Fed rate cut is not going to help equities because they don't have enough cuts in the system to really drive equity prices up higher. It's a process. Just like the rate hikes of 2022 are still working their way through the system, and they're predicting recession due to that fact, it's going to take an equivalent amount of time for any rate cuts to work their way through the system as well.
We think about the VIX that was briefly above 20 a few trading days ago. Now it's at 17. We look at just what's gone on in the 2-year. It's, you know, solidly above 4%. The 10-year seems stuck at 3.5%. And when I think of that spread right there, I say to myself, okay, the 2-year is reflecting the fact that the Fed's going to 5% in Fed funds, and they're still worried about inflation. The 10-year is telling me that it's worried about that GDP reading that we just got at 1.1%, which
that's the yield curve. That's the yield curve steepening.
Is below the originally forecasted 1.9. Now that's not where we settle out for Q1, but that is a stagflationary sort of setup, which again, I don't think is supportive of equity valuations where they are right now, despite the fact that we have seen some good earnings. There's no doubt about it. But I will say this, you know, it's interesting for like every Chipotle that we had yesterday that broke out and it just looked like we were in a raging bull market. Today, you see a Domino's, which is down 5%. You know what I mean? Which is a disappointing result. So how does some of that square off as you're thinking about just kind of this Q1 period and what Q2 is likely to shape up to be? Because if we're having lower readings in the GDP forecast right now, I got to think that higher for longer rates is going to weigh on Q2 growth also.
Yeah, so higher for longer rates is going to weigh on everything for the rest of the year, in my opinion. But, we'll see what happens with if the Fed has to cut or not. Here's what I would tell people, and obviously I don't talk about individual stocks, but if you're out there and you're analyzing individual stocks and you're looking at something and hearing reports of revenue growth being surprising to the upside and revenue growth being really strong, dig deeper and find out if that revenue growth was actually because they increased unit volume, increased market share, actually increased whatever it is, their audience. Because if it's just because of pricing pass-throughs, that is not sustainable. And think about what we want to happen here and what we're trying to make happen here is that prices come down. So if this is all about pass-throughs, which for some of those companies it was, that's not going to last. And I would expect that into Q2, you start to hear about more margin compression. And then just look at the mix. And I know we've talked about this a couple times. Revenue growth is still positive, about 2% on the quarter. Earnings growth is negative, which means that mathematically margins are contracting. So at some point, if and when that revenue growth turns negative, earnings are going to turn even more negative from there. And you have to continue to think about the math of that and just what is really at risk from a growth perspective.
So really, really good segment there. And even with Dan, he made a couple of good points, to be fair to him. Really, really good segment there. And this is the environment that we find ourselves in, because I want you to think about it. When I woke up this morning and we took a look at the economic data, we had the Atlanta Fed dropping down GDP growth. This line here, don't worry about all these colors and bars. Just worry about the line. And they're dropping down our GDP growth dramatically, and will probably ultimately be a negative read. Core CPE came in hotter than expected. Q1 higher than Q4's 4.4% above the estimate of 4.7%. So this is the Federal Reserve's favorite inflation gauge, the PCE. Well, this is a core. This looks like CPI, but PCE came out hotter than expected, and that's what the Federal Reserve watches. Not so much PCE. So when you take a look at the markets and what they're anticipating, all I focus on with this is that they're not anticipating a first rate cut until possibly September. So we're going to get, as it stands right now, this is always subject to revision, continued rate hikes May, June, July, and they're going to keep hammering this market. You're going to feel these rate increases from 2022 into 2024. These rate hikes that are going to come in these coming months are not going to be felt until late 2024, maybe a little bit earlier, but probably late 2024. So a lot of pressure on this market, and forward-looking multiple expansion is probably not going to happen. You're probably going to see, due to layoffs, you're going to see revenue growth, revenue decline. Companies are not going to be able to cut anymore. So then they're going to lose on revenue and they're going to lose on earnings per share. So while this is a good quarter, it may just be, for many of these companies out there, like Liz Young just said, it may be a quarter that was saved due to the fact that they went to cost cuts to salvage the quarter. So do your research before you buy any one of these companies that really had gangbuster numbers. Make sure that they grew sales, not just EPS. EPS could be manipulated. You want to make sure they grew unit volume growth, or they took market share. both or at least one of them, not just cost savings. All right, so while we have all the shenanigans happening in the media with Tucker Carlson, in Washington, the corruption, we get the banks that are still in a lot of trouble. This is as of today. Bank bailout facility usage soars for second straight week. Money market inflows resume. So you start to see money flow into money market funds again. A little bit of confidence coming back in, but these banks are still in a lot of trouble. And what did First Republic do today? FRC? They're up. Incredible. Let's go to some comments here. Pete. Welcome, Pete. Donnie, welcome. The lovely Jody, welcome. TZ Burton, welcome. Any reason LABU was red flat when the rest of the market ripped up? Yeah, it's just rotation out of the one sector into high tech. That's where the earnings growth is right now in the high tech sector. XBI hit some bad technical analysis signs, but could delay a bounce. So that's why, yeah, I think it's just sector rotation. That's all. I wouldn't worry about it too much. As a matter of fact, I sold some puts on LABU. I covered them yesterday. We made money on those. Okay, Donnie, we'll check those out in a minute. Stock chart shows PE on Amazon. I'm not sure how they calculate these. To be honest with you, I just go by IBD. I try to stay consistent. Either way, they're expensive. Either they're not making money or they're very, very expensive. All right. What else do we have here? Anything else? Let's just go to the yield curve. Actually, we didn't go over the Fed's balance sheet. Fed's balance sheet declined this past week again. And we have, I mentioned this earlier, folks. Please, I'm begging you. Focus on the yield curve. This is the weekly chart of the yield curve. I'm going to take my crayon out to illustrate what we're seeing here. It pulled back today, which allowed equities to rally. But take note. Higher lows RSI. Higher lows on stochastics. And look at this Pimp Mac Daddy of a higher low. And it looks as though we are going to move up higher here. So remember that, the yield curve can steepen for a while and things get a little bit wonky once you get into the this is not the chart I wanted. Gray zone here at about just above flat to a positive yield curve. And once we get into this range here, and we're still a ways away, but we can get there quickly, that's when the stock market usually begins to buckle. So this has also played a factor in the fact that I took some shorts off the table today because A, you had price action strong on the Qs, momentum strong. We closed at the highs, and the yield curve still has a way to go to steepen before we begin to see the markets buckle. And when you take a look at the charts on a weekly time frame on equities, in particular the triple Qs, keep in mind, tomorrow is the end of the month. So this is a weekly chart, and we've been talking about this trading range for a few weeks now. I said I was bullish. I turned bearish briefly yesterday, and that burnt me. So I'm back bullish again, and it looks as though we are going to break out. So that's one chart. But the really important chart here is the monthly chart. And the monthly chart, what we want to pay attention to is the 20-period moving average. We're right there. When Amazon reported earnings, we were above that 20-period moving average, excuse me, the 20-period moving average on a monthly time frame, and that's at 321.02 per share on the triple Qs. Going back to the after hours price action on equities, you could see that the triple Qs went from an after hours spike to now being negative in the after hours. And that 302 mark, we went up as high as 322.80. Think about the monthly resistance that was above there and all the sellers that moved in. That could be approximate reason as to why we're beginning to see a sell-off now, because we hit those monthly resistance levels and you may have had some program selling up there. Here are the Q futures, NASDAQ futures, and we are down at current by spot 27%. Does it rally back by tomorrow morning? Yeah, it could. The weekly chart still looks good, but beware. Beware this market. So taking a look at other aspects of the equity market or the bond market in this case that we need to worry about going into the new trading week is the 10-year yield. I mean, think about this. You had GDP, which was revised down by the Atlanta Federal Reserve. So you have economic growth going this way, inflation going this way, and what did yields do? They rallied. Why? It's because it's the bond market saying, hey, Federal Reserve, you gotta jack up these rates. You got a problem here. Yet equity still rallied. It blew my mind. Here's a daily chart of yields. Big move up higher today, 2.8%. And the bond market, still positive on the week, still holding support, but it's on shaky ground. Now, the one chart that has me a bit really perplexed is the US dollar. And we are off the lows of the week. I warned last week that we may get a breakout here. And if you take a look at a daily chart of the dollar, we had a head and shoulders setup, left shoulder, head, right shoulder. This blue line here represents the neckline. We broke the neckline like a half dozen times already. It's a very fungible neckline, a very porous neckline. We've broken it, rallied back, broken it, rallied back. Today, we did not quite rally through it. They tried, but there was a rejection there. So the dollar may surprise us to the upside. I wouldn't be a bit surprised to see the dollar drop like a rock, but and I kind of hope it does because we're long of gold in the gold mining stocks. But don't rule it out. I'm not in that camp yet where I'm going to rule the dollar out. Volatility on the week, still up on the week despite today's price action. We broke down 2 weeks ago below this support level, and we are still below it. So the VIX has got some work to do to salvage the week, and on the month, horrible price action. Horrible, horrible price action. Yet, equities really did not gain. You have the VIX down nearly 9% on the month. Beware of this descending wedge formation. Beware. So the VIX is down nearly 9%, yet the S&P monthly is only up not even 0.75%. So the S&P 500 is not capitalizing all that much on the VIX being very, very muted. Now, overall, this is a fairly bullish chart with momentum indicators, the RSI up top, stochastics immediately below. They're implying that we're going to get higher highs, but we always want to be prepared and say, okay, when is the market wrong? When are they telling us, hey, we're going the opposite direction if we break the support level here? So right now, the breakout is intact. We're continuing to put in higher lows, but watch for a break of that lower band in blue of the S&P 500. Now, tomorrow is going to be a critical day because the price action after hours today was really something. Weekly view. We're up on the week, just barely holding on to that support level. So, looking at the chart technically, taking away my bias due to the economic background and Washington, D.C. and the corruption that we're seeing, just based upon the chart, I think odds favor bulls here. But when I take everything all in, while I am open to getting long of the market, if we break out next week, it's going to be a very defined risk trade because I don't want to wake up one morning, we got a massive gap down in the futures market, and I have undefined risk out there. I want it very, very defined, going into each long trade, just like Talon has with Amazon. I want to know exactly what my max loss is going to be using call spreads, selling puts with a insurance policy underneath. So that's the play here. I think that we could easily move up higher here, but the only reason why it's moving up higher is purely due to momentum, and that is it. So when that game of musical chairs comes to an end, have an exit strategy because it's going to be brutal. And watch the yield curve. All right. The banks broke down this week, folks. They broke support. Another reason why we need to be very concerned about this market. They rallied back today, but who cares? That weekly chart is what matters, and we have a breakdown here. It's very, very significant. So please stay focused. Semis are down on the week. There's something very, very wrong with the semiconductor names. They're down on the week. They have been down. This is what now, assuming they close down tomorrow. This is their fourth consecutive down week. With the triple Qs, they're down 2%, over 2% on the week. With the Qs, up over 1%. What's that all about? What that tells you is that the semiconductor names, everybody had to have them. It was all about AI, and they're very, very expensive. NVIDIA is an extremely expensive stock. So I think what we're starting to see is an acknowledgement, at least in certain sectors, that valuations do in fact matter, and they're taking money off the table. LABU brought up earlier. Yeah, not a pretty chart here. Not a pretty chart at all. So I would avoid this. Kind of glad I took those puts off. We'll take our crayon out here. And, I love to trade LABU. But we need a breakout. Or a washout, one of the two. What else we want to talk about here? Let's talk about oil. Oil. Oil on the week. This is very, very significant. We broke out several weeks ago, and now this week we stand ready. One trading day left to go. We stand ready to break back down on oil. So what does that tell you? Well, what you want to do is look at the game holistically, right? So I always talk to members about canaries in the coal mine. So when we talk about canaries in the coal mine, what are we talking about? We're talking about the transports in particular. Transports, small caps, banks. Transports, banks, small caps are doing horrible. So take a look at, we did oil. Energy is going to be important tomorrow. Remember, our energy reports coming out. This is not what I wanted. Transports. Here we go. The transports have broken weekly support. Not one support level, not two support levels, but at current 3 support levels. And if they close down tomorrow or worse, they would have also given up their 50-week moving average. Also, head and shoulders setup. Left shoulder, head, right shoulder. Then you take your crayon out and you say, okay, where's my neckline here? I would go with a 45-degree neckline. Make that red for dramatic purposes. And we close down below that mark. You're going to see the Dow transports down at 1290. So what do you read into that? It's the economy. The economy is slowing. The Atlanta Federal Reserve told you so today. GDP growth declining, forecasted out, declining it. Inflation's rising, and the Federal Reserve is going to raise interest rates. Stagflation. Gold. Up on the week, but struggling. And I spoke to members about this last night because yesterday, the mining stocks, which rebounded today, the mining stocks were very, very weak. They rallied and they faded and they would turn negative on the day. And the one thing that you need to remember about the event, we're going to call it the event. Let's do a hypothetical. We go back to the yield curve. Yield curve is up and into that gray zone. Federal Reserve feels it necessary to pause and even cut rates. Why? They're responding to something. Something's happened. So the market begins to sell off. What goes down? Everything. Gold to a lesser extent, but everything goes down. Why? The L word, liquidity. People sell what they can sell. They're going to sell their losers last because they want them to come back. They're going to sell their winners first, their strongest stuff. That's out the door. So they're going to sell everything possible to draw down those margin calls so that they could stay somewhat liquid. So expect weakness even if the stock market breaks down and it's due to inflation and the dollar's tanking. Even expect then gold and silver and the mining stocks to decline as well. They'll recover first. You need to have cash on the sideline for when they bottom out, start stepping into the breaches, I like to say, and start gobbling them up. Now, taking a look at gold here, given the price action or the I shouldn't say price action, given the report on PCE today, you would have expected more out of gold, but maybe because yields rallied and the dollar rallied, maybe that's the gold traders saying, you know what, all right, looks as though the bond market has inflation under control here, which they don't. So we're in a bear flag setup, a bull flag setup, sorry about that, bull flag setup on gold. We're off the highs of the week. Let's take a look at how it poised to close out the month, though. Not great. Not great. We're going to close up, but not great. We gave up a lot of real estate, and we didn't close out the day today above 2,000. That's a problem. That's the market sending you a signal saying, hey, There's resistance above. There's sellers above. Gold mining stocks eked out a gain. I think I'm going to be tightening up stops here on the gold stocks. NUGT closed up. Very light volume. You can see the price action yesterday. They rallied and turned negative. I thought that they would break today, but they didn't. Actually, this is a weekly chart, but the daily chart looks very, very similar. Nice reversal day today. But we did put in a new daily lower low. We break today's lower lows. We got to take money off the table here. And that's pretty much it. Let's do some chart requests. Before I leave here, for Jody and the Boyle, always with the Boyle. Let's go over Boyle with Jody in mind. I think she said last week she's not interested in it anymore, but we'll go over it anyway. All right, so Boyle consolidating here. I was checking to see if you were listening, Jody. You got it. So we're consolidating on Nat Gas. I have not had good luck of late with Nat Gas, so I'm going to avoid this. All right, folks, again, we're being sponsored by TrendSpider. Help support the channel. If you want AI incorporated with your trading, you got to use TrendSpider, folks. You got to have it. I use it. I like to have the multi-screen. You could have it set up however you want, multiple time frames, different symbols, same symbols, a lot of functionality in here. Here's the multi-symbol view. They have a 35% discount code below. Please take advantage of them. CMG was one of our stocks going into the new trading week that we liked. These are the charts that we went into the week with. Very bullish on, and the 30-minute chart club. There's a link below, 30-minute chart club, private live stream. We're going to be going either on Saturday or Sunday, going over the charts. These are the charts we went over last Sunday, and obviously Chipotle did very, very well. Let's go to a weekly view. Shopify not doing all that well on the week. Nike up on the week. CRM off the week's highs. And Chipotle obviously killed it. So if you're interested, you want to join that private live stream, use the link below, enter your email address. It's free. All right, let's do some chart requests. And let me make some notes here. MGRX. While I'm writing these down, I'm going to bring up the futures action so you folks can watch what's happening in the after hours session. Volatility very strong. MMM. SOXL. That. All right. If I missed anybody, let me know, and I'll get you. But that'll carry us through to the end. Pete, I got you. All right, let's do it. Let's go weekly chart first. As always, start with the higher level view. I'm an unwilling short of this stock right now due to earnings. 3 times the market maker anticipated move. Son of a bitch. Pardon my language. Family-friendly show. Sorry about that. All right, let's get to it. FRC. Are you serious? Who requested this? Jody, are you serious? No, no, no. Bad, bad, bad trader. Bad. No, never. Dead money. No. Ongoing concern issues. Avoid like the plague. No, no, no. I'm shocked. I'll go over Boyle again for you. No, this is they're looking for a buyout, and it's not going to be it's not going to be at par. So I'd be very, very careful here. This is more of an arbitrage play than anything else. I would be very, very careful. Yeah, I'm not used to the symbol, to be honest with you. So I didn't even think about the symbol when I saw First Republic pop up. I'm wow. There's like kryptonite to Superman. Not that I'm Superman, believe me. Okay, so FRX, bad. MGRX. See what else she's got ready for me. MGRX. What, did this just come public? What the hell is this? Jody, what are you doing to me here? A penny stock. A penny. I want you to know that the look I'm giving you right now is endearing. Okay, stay away from these things. This is bad. There's not enough data here. I don't know whether a pink a pump and dump operation is pumping this. It's a what did it close at? 87 cents. There's just not enough data here to identify. It was just accepted on Webull. What do they do? It looks like a pharmaceutical. Webull brought it public? Did they do that? I can't give you an honest opinion here. It's in play. I'll say that. It's definitely in play. If you're going to do it, I would wait for a filling of this gap, and that's it. That's it. I would not chase this. I have no idea what they do. You got to worry about the manipulation here. So you don't know whether or not you've got some website that's out there front running this thing with a chat room or a Reddit group. So please be careful with these names. Please. Look at the wick on the week already. Look at how high it was. As high as $2.22, 23 cents. And now we're down close at $1.29. So please be careful here. I can't give you an honest opinion on it. MMM. All right. So Magno focuses on, develops, markets, and sells various men's wellness products. Oh, Mark just typed in Hims. Is that that same company that sells that stuff? I see. I see. I get you. Yeah, be really, really careful here, please. All right, let's go to 3M. 3M reported, so we have earnings in the rearview mirror. I don't know what their numbers were like. Apparently, not much happened here. I like the consolidation. I like the fact that earnings, I don't have to worry about them for the next 3 months. We have a flirtation with a weekly breakout here. Volume on the week is good. Stokes hooking up. Interesting. Daily view, we have a breakout daily time frame. I would be a buyer of 3M on a pullback tomorrow. It has to close above that mark at around 104, give or take a dime. I think this goes up. How are we closing out the month? Yeah, I'm liking this. Slow and steady pullback. I think we could rally up to this quarterly resistance level at 126.24 on 3M. So I'm liking that. So this is a monthly chart. And what TrendSpider allows you to do is to overlay quarterly, yearly, monthly. Well, this is a monthly chart. But if you're on a daily chart, you can overlay all of these time frames on top of that chart to identify where do you have higher level resistance on top of your price. So this is looking good. I'm liking 3M here. So bullish 3M. SOXL. This is the bull ETF on the semis. Monthly view. It is testing support on a monthly time frame. We're holding it. If it breaks support and moves lower, I think we're coming down to $10.25 per share. Weekly view. We're holding on to support. You could buy this, use a stop right below support at $12.11. Daily view. Again, same deal here. I think this could be bought, but use a tight stop immediately below the support level and get out. Matt. Patel, I haven't gone over this chart in God knows how long. It looks good. Daily chart looks good, but we got to go with the monthly chart first. I like it. I think it's consolidating very, very nicely. A lot of bottoming tails here. What they tried to do is they tried to break it out back here in February, but they were rejected. So you can see here that there's 9-period monthly exponential moving average is acting as a ceiling on the shares. Once we pop above that mark, I can create an alert on top of this. Once we close above that, we can look to get long. Just a note to myself. So we're looking for a breakout. Otherwise, I don't think anything needs to get done here until that alert fires off. You want to buy strength in the situation. Otherwise, you're just sitting with dead money. Weekly view. Looking good. High or low. Oh, we've broken out here. We've broken out. So if you wanted to nibble on Mattel, I'd have no problem with that. Volume is good on the month. One trading day left to go. We're almost at that moving average on that volume anyway. Okay. Daily view, we broke out today. We broke out weekly and daily today. Stochastics, momentum indicator moving up higher. Bollinger Bands, very narrow. Very, very narrow. That could allow for a Bollinger Band squeeze. I would check short interest on Mattel. Probably not much, but it doesn't hurt. Check the number of days to cover on shorts, because if this begins to break out and you have a high short interest, you could have a short squeeze on your hands. And if it's optionable, the options are probably extremely cheap because there's nothing going on here. Dirt cheap options. IV percentile, 3%. Dirt cheap options. They're not pricing in much of a move here at all. Here are the market makers' anticipated move for through May. They only have monthly options here, which is understandable given the volume. They're expecting only a $1.19 move between now and May the 19th. Not a big move here. They're expecting that, however, is that they're not technicians and they're not looking at the weekly chart, identifying that the shares are broken out. So this is an opportunity where I would like to take advantage of the options that are on sale. And I wouldn't go with the Mays. I would probably go minimum Julys or further, depending upon if this is an investment for you. You want to convert those calls to common at some point in time. I would do a call spread here and enjoy the ride because I think it's probably going up higher. What else do we have? Jeffries. Daily chart looks good, but we're not ready for the daily chart. Weekly chart looks good. Monthly chart looks good. We probe to the bottom of this downtrend channel here. This is the automated trend lines. Again, TrendSpider, 35% discount code below. Don't make me look bad, please. They yell at me if I don't have a new subscription every single live stream. TrendSpider. Help a fella out. So, yeah, we're looking good here. Bouncing off of monthly support. I like it. Not loving the sector per se, but I like the setup here. Daily, weekly view, we have broken out above resistance, a little bit more resistance immediately above. Daily view, we broke out on a daily time frame. I think it's going up. As long as the market holds up, I think this goes up. So Jeffries, bullish. I'll take a couple more. You're welcome, Pete. Tesla, nice reversal day today, but let's face it, Tesla's got a lot of problems. So they reversed it. This is a daily chart. I'm staying intentionally with the daily chart for a reason, to show you that they stopped it dead at resistance. You got to be careful. I wouldn't buy Tesla until we close the day out tomorrow and next week or whenever above, let's call it 161 per share. You got to close above that mark because Tesla is under a lot of pressure. Now, we had a Tesla trade on. We had a big strangle on it. Cash flow strategy. We made money on it. I closed that out yesterday. We're out of it. I may reestablish at some point in time in the future once Chipotle stops killing me and we get our money back out of that one. But Tesla right now is under a lot of pressure. You have a double top here. Ugh, let's get rid of all these. So much better. We have a double top. And we have broken down. One trading day left to go. Maybe it rallies back tomorrow. But Tesla is in trouble. It's walking on the other side of the mountain. What does that mean? Here we're going up the mountain. Here we're going down the mountain. Be very, very careful. So I'm not loving Tesla, folks. Thanks for being here. Don't forget TrendSpider. I give it away free to our silver and gold level members. Donnie, you're very welcome. And everybody have an awesome, awesome weekend and a profitable trading day tomorrow. Members, I'll talk to you tomorrow. We'll watch out for the opening price action. It's going to be interesting. So I will talk to you soon. Be well.